Hello everyone, this is George DeSantis here with the look at the market for the week ending April 22nd, 2016. Let's start with the monthly chart as we usually do, and this is the S&P 500. Nothing changes very rapidly here because, of course, it's a long-term chart. It's like that, what I call that aircraft carrier that doesn't turn very quickly. So as we saw last week, this month's bar, the month of April, is above the instantaneous trend line. The Kalman filter is bumping up against the instantaneous trend line. And this bar, the current bar, has hit the parabolic yellow dot. If this trend continues, we will find this parabolic yellow dot below the most recent price bar, which would be next month's month of May. And that would indicate that there is a turnaround in the trend to an uptrend on the monthly chart. At the middle of the chart, we can see that MACD, as we saw last week, continues to trend up from below the zero line. And below, at the bottom of the chart, Elder Force Index, the 13 period or 13 month, crossed above the zero line and remains there. So in general, nothing much changed here this past week. So let's take a look at the weekly chart of the S&P 500. Now on this weekly chart of the S&P 500, which we looked at many times in the past, it's one of my favorite charts. At the top of the chart, we can see that the S&P 500 on the weekly chart made a high of 2111.05. That was just above the 2100 point of resistance, as we've talked about before. This trend line here, just above the close of this last week's bar. In addition to that, what is concerning here, which gives us some pause and we might expect a continuing pullback or retracement, is the fact that we now have what is called a candlestick shooting star. I call it the finger. We're getting the finger here. It's quite possible we could pull back to this 2046 support resistance line. Hopefully we'll find support here. And if not, the next support level should be around the 2000 level, which is where the instantaneous trend line is. So if you own the SSO or Spider, or like I do, the SSO, you want to be careful not to give back any small gains you might have and take a bigger drop here, if that's your style of trading. So we can see that that the market still looks pretty bullish, but we're bumping up against all this resistance here, this trend line and the 2100 level. Now we can see that the parabolic is still below the most recent bar. So there is no indication that, according to parabolic, that we need to reverse this trend, because the parabolic, remember, is called the parabolic stop and reverse, SAR. So right now, the parabolic is not signaling a reversal. In the middle of the chart, RSI 12, especially on the weekly chart, is a very good trend indicator. And right now, it's right at the 60% level. In the lower down, we have MACD continuing to hold above the zero line. In fact, it's continuing to trend up a bit, and that's pretty bullish. And at the bottom of the chart, percent R is trending up above the 80% line. So this tells us that the momentum of this uptrend here is still pretty good, pretty strong. I neglected to mention earlier that the Kalman filter crossed above the instantaneous trend line, and it's still continuing to trend up. And of course, that's one way that we define the uptrend, the trend, okay? The Kalman filter is continuing to trend up above the instantaneous trend line. Now let's take a look at the, so before we go to the daily chart, this chart is still pretty bullish, with the caveat or caution that we might continue to see a retracement back to the 2046 level, or even to the ITL, the instantaneous trend line here, this blue line. So let's take a look at the daily chart. And here's one of the daily charts of the S&P 500 that we usually look at. It doesn't have the instantaneous trend line and the Kalman filter, but it has the 9 EMA and the 30 weighted moving average. The 9 exponential moving average and the 30 weighted moving average. We can see that the 9 is still above the 30, so according to the 930 approach, we are still in an uptrend. And on Friday, we closed a little higher than the 9 EMA, because this would be the close right here, the top of this body of the candle. So we are still in an uptrend according to the 930 approach. The parabolic yellow dot is still below the most recent price bar. So on the daily chart, this is still indicating that we're in an uptrend. Somewhere in the middle of the chart now we have RSI 12 above the 60% line, so that's still pretty bullish. The Larry Williams pro buying power indicator that I wrote is still above the zero line, indicating that the pros are still buying this market. And also percent are trending down a bit, but still above the 80% line. So according to these indicators, we are still pretty much in an uptrend. Little weakness, because whenever the price seems to get too far away from the 30 exponential moving average, tends to pull back. Gets too far away, pulls back. Gets too far away, it pulls back. So there's this tendency for the regression to the mean, and we see it all along here, and we once again see it here. So the hope is, and of course we know hope is not a strategy, but the hope anyway is that this 9 EMA continues to hold as support for these pullbacks. So let's look at something else. Let's look at another daily chart of the S&P 500. And here's a daily chart of the S&P 500, a different one than we just saw. In this case, we have the instantaneous trend line, and the instantaneous trend line is the blue line, I'm sorry, and the Kalman filter is this yellow line. And we still have the Kalman filter above the instantaneous trend line, seem to be having somewhat of a regression to the mean or pullback to the instantaneous trend line. I checked the expert indicator. Let me do it here. There's this expert indicator or comment, and when we check that, we are instructed here that the market is currently in a cycle mode. The dominant cycle is 10. Hold your long position. Now, this comes from Dr. Ayler's work with his MESA system. MESA. It's called maximum entropy spectral analysis. You can go to the internet and read about that. However, he's saying the expert indicator is telling us to hold our positions here because we're in cycle mode. Dr. Ayler's work, he's a physicist. He says that these trends are made up of cycle modes and trending modes. And right now we're in a trend mode. A cycle mode. Okay. Now the parabolic is still below the most recent price bar, and we still have an uptrend. This does not signal a reversal yet, and the expert indicator is saying hold your long positions. Jerry Appel's sum of the rate of change indicator is just sitting at the 4% line now, so that's at a critical juncture. Should it go below the 4% line, we have reason for more concern about a bigger pullback. MACD is still hovering around that zero line. It's now at minus 0.12. So the market is somewhat overbought here, but it could remain overbought for some time. Now at the bottom of the chart, percent R is now trending back down to the 80% line. So quite possibly we see a pullback. We see more of a retracement or pullback. Of course, time will tell. If you have the S&P ETFs or even some individual stocks, you want to keep a close eye or use physical stop loss orders so that you don't give back any gains and that sort of thing. Okay, all right, let's look at something else. Here's a chart of the NASDAQ, the weekly chart of the NASDAQ. And we can see that the Kalman filter is above the instantaneous trend line. Trend is up. parabolics below the most recent bar, just as we saw in the S&P. RSI 12 is above the 50% line. We would begin to get concerned if RSI 12 crosses below the 50% line, as it did here, beginning to show some weakness up here and again here. Or we can see it over here. And if the RSI line begins to approach the 50% line, if the RSI does that, we get more concerned that maybe we have more of a retracement. MACD at the bottom of the chart, though, continues to trend up as we saw in the S&P. Now here's the stockcharts.com chart with Alex Elder's impulse indicator with the bars painted red, green, or blue. Red means it's bearish, and in other words, we don't have permission to be buying at that time. Blue gives us permission to buy or hold, and green gives us permission to buy or hold. So right now on the weekly chart, we have a green bar on the weekly chart. It gives us permission to buy or to hold the S&P 500. We also have some pickup here in volume these past few weeks. I was concerned about the volume here, but now we are seeing some increase in volume, perhaps indicating that some institutional buying is occurring, some more institutional buying. At the bottom of the chart, we have Williams per centaur above the 20% line, and that is indicating to me that yes, in some sense it's overbought, but notice it could remain overbought above the 20% line as long as we have an uptrend like we had here. So these oscillators are not as useful in an uptrending or downtrending market as they are when we have a cycling mode or a trading range market in a trading range. So be careful of that. So we are in an uptrend, and percent R is above 20%. So that's indicating momentum is pretty strong there. And MACD continues to trend up. So we have permission on the weekly chart to be either buying or holding the S&P. Let's look at the daily chart. On the daily chart, we have a slightly different story. The daily chart has given us on Thursday and Friday 2 blue bars, not red, but blue. The major concern I have here is this divergence of MACD. If you look at it, when the market made a high here, when the market made this high, MACD made a high here. When the market made a higher high, MACD pulled back, okay, and it went below the zero line. Now that the market is making an even higher high, MACD is making a lower high. So if we drew a line here, a trend line, we would have a divergence of MACD trending down while the S&P is trending up. So this gives me reason for concern that we are likely to get a bigger retracement than we've had so far. At the bottom of the chart, though we can see that Williams per centaur is still above 20%. So this week will tell us more about whether we have a bigger retracement than we just saw on this daily chart here. So let's look at something else. Here's something that we haven't looked at in a long time, and it is the number, the S&P 100, the percent of the S&P 100 above 200-day moving average. So the percentage of the stocks in the S&P 100 that are continuing to be above the 200-day moving average, and we can see that is way above the 200-day, which is the red line here, the 50 being the blue line. So this really tells us that this market still has a great deal of strength in it. And I just wanted to show that because although we are seeing some signs of weakness, we still have some strength here. We still see a lot of strength in the number of stocks above the 200-day moving average. So that's it for now. We'll talk again next week. We'll point out some new things next week. Have a nice weekend and enjoy the weekend. Bye-bye.